It's been 3 months since I have done a video on two cheap or undervalued stocks that I believe are a buy in the stock market. The last one I covered two stocks. The first one is Marine Max, and Marine Max is up around 15% from the $30-$31 range since I started talking about it. But the second stock, which was actually a huge success, was CSV, Carriage Services, and since I did this video it was around $24 per share, and it's up over 50% since I did this video, so around 50% in the last 3 or 4 months. And the main thing that happened with this company, it was a funeral home business. After COVID, they had peak demand in COVID and stuff. COVID was gone, they were comparing quarter on the last year, and then the numbers were looking very, very bad, and the stock fell down crazy. And the first video I did on the stock was around the $31 range, and I said the stock looks undervalued. But then we had a big surprise on one of their earnings report, and the stock is illiquid, so it sold off 28% in one day, and it went all the way down to $22. And when it did go to $22, $23, I more than tripled my position, and now I'm up around 32% on this company in the last 3 or 4 months, which again has been pretty amazing. But whenever we had this big drop after I did my first video, of course I got the trolls on YouTube. They were telling me, you don't know what you're talking about, you talked about the stock and it's down 28%, without even looking at the reason of why the stock went down 20%. This is when I made my second video on the company to actually explain why the stock went down and how this actually makes no sense. And this is one of the reasons I created my own investment group, because I can share with other people whenever I sell something. For example, if I decide to sell any of those stocks tomorrow morning, I could just go and sell it and just let them know. I don't have to do a video every single time I do something, which is why this video should be considered as ideas, and you have to take your own risk management appetite into consideration of your position sizing, of when you should take a profit or if you should cut your loss or not. And I'm gonna share two pretty interesting stocks with you today. One of them, most of you are familiar with it, but the second one is actually a new stock which I haven't talked about before. So again, no financial advice, and I really hope you enjoy this video. Now, the first one, which I have talked about before, and I used to be a shareholder of the company, and I might become a shareholder again pretty soon, which is actually CoreCivic. It's a Michael Burry stock, and the stock is down since it was around $13.50. This is when I sold most of my position. Whenever we had the hype rally around, the Republican Congress and all that type of stuff, the stock made a big move, and then it started falling down. It's starting to look pretty interesting again. Now, for those of you that are not familiar with CoreCivic, CoreCivic is the largest private owner of real estate utilized by the government. You might have heard, President Biden or former President Obama and a lot of those Democratic presidents that they wanted to end private prisons. And every time we have a new president, they say they're going to end private prisons. But again, CoreCivic is still here and GEO is still here. And this is for very good reasons. One of the reasons is in the United States, we have aging, infrastructure crisis, and especially with prisons. They haven't been building them since pretty much the 1960s. You could look at the numbers of prison opened, mainly because there's a lot of regulations around it. It's costly, and no one wants a prison close to their backyard, so it's pretty hard to build new prisons. So what ended up happening was that CoreCivic and GEO, they have contracts with the governments, and they have contract with the state. The contract with the government have been getting eliminated. But whenever the government eliminates a contract in a CoreCivic owned prison, they have two choices: either to move them to some type of a different prison, which is very, very costly, and sometimes there's not enough availability. But their second option is to actually buy the prison from CoreCivic and keep the prisoners there, and they're buying this prison for much, much worse than CoreCivic actually has it on their book. And this is an example we talked about before. They sold this McRae Correctional Facility in Georgia for around $130 million, which was much, much more than what they had it for on book. And they basically did, pretty simple math of how much they got for this prison, and they divided it by their total beds, which is around $4.5 million. Their total, pretty much equity value per share, net of debt, is around $30 per share. Now, I'm not taking their word at face value. My own estimate, which I did many videos on before, CoreCivic's liquidation value is around $20 to $22 per share. And now CoreCivic is sitting at $9.80 per share. But even if their estimate was 50% wrong, it's still $15 per share. And now CoreCivic is trading at $9.80. And this is a big value proposition with CoreCivic. Now, the big difference between CoreCivic and GEO is that CoreCivic actually has a much better debt profile than GEO. They have around 165 million due in 2023, and they have like 130 million of cash, so it's not a problem at all. And they don't have anything due until around 680 million in 2026, and they will likely generate massive free cash flow from now then to actually do them. And because CoreCivic actually has a much better debt profile than GEO, CoreCivic can actually buy back stock, and they have been aggressively buying back their own shares, around 5 to 10% of the market cap, for example, last year. And I believe they're going to continue doing a mix of buybacks and paying down the debt. But the biggest issue with CoreCivic is actually their guidance. I did not like their guidance at all. If we look at the net income that they have on book, it's around 58 million to 75 million, which would put the company essentially around 16 times earnings. Now, 16 times earnings for such company with no growth, with all those regulation type of issues, is expensive in my personal opinion. But if you look at it in terms of an asset base, if CoreCivic can keep selling some of those assets for 2 to 3 times what they are worth, take the cash, pay down the debt, and buy back stocks, that can create massive value for shareholder. Now, the mean PE ratio for CoreCivic is around 15 times, and now sitting around 16 times, which is on the high end in my personal opinion, which is why I do believe that CoreCivic is undervalued at such prices. But I would prefer to buy CoreCivic somewhere around the $9 per share, so at least the PE ratio is lower than what it was at the maybe 14, 13 times earnings. It would make much more sense to me than buying it right now at 16 times earnings in terms of a valuation perspective. But if you look at it in terms of an asset play, if they can keep selling those assets, buy back stock and then repay the debt, CoreCivic is very undervalued at such prices, and the assets that they have provide massive margin of safety. Now, the problem is that there's no short-term catalyst for CoreCivic to pretty much go up. It pretty much goes up on the elections whenever we have rumors of a Republican president or Republican Congress, because they have much more friendly rules for those private prisons. This is why we had a massive, run, which I was part of. I was up around 30-35% in a matter of months whenever I was buying CoreCivic, and then I sold around 13.50. So I believe the next time CoreCivic is going to make a massive move is likely going to be in 2024, whenever we have the presidential election, which is why you're going to have plenty of time to accumulate CoreCivic or do whatever you want to do with it. But I still believe CoreCivic is undervalued. Now, this is time for a new stock which I haven't talked about before. This is more around the gold industry. Most of you believe and know that I'm actually pretty bullish on gold, not just for this year. I believe maybe this year it could go down a little bit, but mainly for the next 3, 5, 10 years. I believe gold is going to have a pretty important role in everything that's happening in the world, from the inflation, from the central bank's credibility, from geopolitical issues, from the dollar going down potentially, and plenty of other things. So I really like gold for the long term, and I personally have a junior gold miner. This is where most of my gold allocation is. This is a pretty small project that I believe in the long term, and I can't share it here because it's like $150 million a company, and I do share it in my own group. But something else that I can share with you guys here is a $1.5 billion company, and this is Sandstorm Gold, and the company is trading at the same level it was trading at when it was crashing in March 2020, and this is for very good a reason. Now, Sandstorm is actually not a miner. Sandstorm is a royalty type of company. They collect royalties and stream from different assets, meaning the miners, like for example Newmont and Barrick Gold, they do their own mining on lands such as Sandstorm, and they do pay Sandstorm royalties for this land. And you have many such business models in the oil sector, like with a popular one, which is TPL, Texas Pacific Lands, or even within the gold mining sector, you have Franco-Nevada, which is one of the most popular ones. Now, looking a little bit more into Sandstorm, they have some long-term projects which are not going to pay off before 2025, but this is what their allocation is going to look like: around 71% in gold, 10% in silver, 14% in copper, which I do really like, especially for the green energy transition, and 5% in other, related type of metals. Now, one of the main reasons why Sandstorm is trading at March 2020 type of levels is because of the $1.1 billion of acquisitions they did before, pretty much a couple of months ago. Most of the acquisitions were actually financed by debt, but a decent chunk was financed through dilution, equity issuance. The CEO, which I'm not personally a big fan of, and he did make a lot of mistakes, actually had to issue some shares to try to do those acquisitions. But this is not something that's new. Every single, small to junior type of royalty company actually goes through those phases to actually expand and eventually become a senior, a gold royalty type of company. And this is what Franco-Nevada went to between 2008 and 2010. They did such acquisitions. The stock went down like 50%. People were confused because whenever you have such things, investors would have a lot of uncertainty and they would be asking themselves if such acquisitions are eventually going to work, or not. So it really kills the share price. But even though Sandstorm had to issue some equity, and the CEO promised that he's not going to issue any more equity in 2023 and in 2024, which I believe he's honest about that, we look at their acquisitions that they made before. This is one, for example, in 2009. They paid $75 million from it. They got around $152 million of free cash flow and around $70 million of, around net asset value. The same thing, another ones they did in 2009. This is ones they did in 2021 of Vale. They paid $116 million. They got around $20 million of free cash flow, and it's valued in terms of net asset value of around $115 million. So they don't have such a bad record of actually overpaying for those acquisitions. I did review them on their website. You could go and review them yourself. I believe most of them will eventually end up being pretty conservative to even cheap whenever they acquire them looking back a couple of years from now. And this will be the big catalyst for the value realization in Sandstorm. But we can see the difference between Sandstorm and other type of royalty companies, the mid-tier royalty companies, and it's trading at a 24% at a discount to NAV in comparison to Triple Flag and many others. So you're actually buying it below net asset value, and it's now around a 35% discount to net asset value because Sandstorm went down like 10% after they actually announced earnings when we had this presentation. So now it's even cheaper and it's still below net asset value. And this is a pretty interesting chart that I want to show you. And this is Sandstorm's net asset value and Sandstorm price. And the Sandstorm price, which is the purple one, you could see it goes up and down. It's now around $4.81 per share. But Sandstorm net asset value per share is around $5.41 per share. And you could see how we had this big, divergence between the purple line, which was the price, and the net asset value per share, which was the green line. And every time pretty much Sandstorm price goes below net asset value, it has historically shown a pretty good, time to be buying Sandstorm. And it did that in March 2020. It did that pretty much in October. And now it's doing it again and it's trading below net asset value. And again, looking at history, this has proven to be a good time to actually be buying Sandstorm gold. And this is where the valuation actually comes in. Looking at their 2023 outlook for Sandstorm, and this is based on $17.50 per ounce, which now gold is trading around $18.30, $18.40, which is again still pretty conservative. They estimate around $148 million of free cash flow for 2023 based on a $17.50 price per ounce, which would actually put Sandstorm on a $1.4 billion market cap, pretty close to 10 to 11 times free cash flow. And we look how this actually compares to other royalty companies such as Triple Flag, which is pretty close to where Sandstorm is at. And we can also compare it to Franco-Nevada, which is a much more advanced company and much bigger company. It's a senior compared to Sandstorm. Sandstorm is trading around 11 times free cash flow. Triple Flag, which is pretty close to Sandstorm, is trading at 20 times free cash flow. And again, Franco-Nevada is trading at 28 times free cash flow. Normally, royalty companies, they don't trade like the miners. The miners trade 8 to 10 times free cash flow because they have a lot of risk. But Sandstorm is a royalty company. I mean, an idiot can run this company. They don't have to put in any capex for the production and all that type of thing. All the miners do the production and Sandstorm collects the royalties. So such company should be trading at minimum 20 times like, Triple Flag is actually trading at. But the main reason it's not trading at such levels is because of some distrust from the management and a lot of uncertainty around a $1.1 billion worth of acquisition for $1 billion company. It brings a lot of uncertainty. But maybe a year or two from now, whenever the market actually sees the potential of those acquisitions and they have a little bit more trust, in the CEO in terms of being more transparent on when he actually announces, buyback programs and stuff, Sandstorm could easily trade back at 20 times free cash flow where Triple Flag is actually trading at. And this is basically a double from here on Sandstorm, which could happen maybe a year from now, maybe 2 years from now, maybe 3 years from now. But this is just one of the ways I estimate Sandstorm's value, not even looking at their 30% discount to NAV. I'm not even talking about that. But looking at the free cash flow, if it just gets back to where it should be, around 20 times of free cash flow, Sandstorm is a double from those prices. But let's assume it actually doesn't get to, wherever it's trading at. We look at their estimates going into 2025 in terms of the mining stuff and all the explorations they have, which they do have pretty accurate data on the exploration and the production units that they're going to have in the future from the miners. But again, none of those are actually certain. Maybe there could be some delays in some projects and stuff. But if we just take that 187, million, and we just take that 187 million, and we assume that Sandstorm trades not at 20 times free cash flow, but at least 15 times free cash flow, and we time it by 15 times free cash flow, this is $2.8 billion. And now the company is trading around $1.4 billion, which would still show me a double over the next pretty much, 2-3 years in Sandstorm if it's just stays at 15 times free cash flow and it gets to 187 million. And this 187 million is actually based off 1750 gold price per ounce. So maybe Sandstorm does get, for example, a 20 time free cash flow, and maybe gold is trading at $2,000 per ounce, maybe 3 to 4 years from now. And this would be massive upside up to 3 times on your money if you're actually buying Sandstorm at such prices. But again, the big risk is maybe golds go down to 1,300, which I believe this is pretty much impossible because the dollar cannot just go and skyrocket to the moon. I mean, I would have a hard time actually believing that. I do believe the dollar is actually due for a pretty big rally right now in 2023, but after the Fed pivots and starts cutting rates maybe in 2024, I have a hard time seeing gold going to $1,200 or $1,300 per ounce. But that would be, again, very, very bad for the company. But you have a lot of cushions. The company is trading around a 50% discount to other type of royalty companies like Triple Flag and others. You have the company trading below net asset value, and you have the company again giving pretty, in my opinion, safe production numbers around 1750 per ounce. What if you have a lot of variability? What if it does trade around $2,000 per ounce? This is up to a 3x in my personal opinion on Sandstorm in the next maybe 3 to 4 years if everything does work out well. So I'm looking at all the ways where I have a lot of margin of safety with Sandstorm, and I'm not really finding much ways where I could potentially, for example, lose money if I'm actually buying Sandstorm and I'm willing to dollar cost average into the company at such prices, or maybe a little bit at lower prices. The only other risk I can think of is maybe again the CEO just issues shares like crazy next year, but after what happened this year and what happened with the share price, I mean, I would have a hard time believing that he is that stupid of actually just doing the same thing all over again. And if he just doesn't do anything for 2023 and 2024 like he promised, I do see massive upside on Sandstorm gold. But none of this is financial advice. I might change my mind tomorrow. Maybe I buy it today, maybe I decide to sell it tomorrow, maybe, you never know. So you have to take this into your own consideration and try to decide for yourself if you like such investments or not. But this was my analysis on Sandstorm and CoreCivic. I hope you enjoyed this video. If you're interested in knowing about my portfolio and stuff, you can check out my own private group down in the description below. So thank you for watching again, and I hope to see you in another one.